What's up, guys? How's it going? All right. So, we'll go through like the Bitcoin analysis. I can go through some on-chain stuff with you guys too, and then I'll announce the YouTube subscriber winner. And we'll go through like the tournament stuff to see like who so far is in the lead of the trading tournament. We don't actually get to see the names of people inside the tournament, but we can see like roughly where people are at. But yeah, right now we're looking at the Bitcoin 15-minute time frame, and we could see that we had failed to break to the upside. During our last live, we were talking about this squeeze event between the 50 EMA right here, the 50-day EMA, and the 200-day EMA. And we broke this structure to the downside. We retested the structure like right here, and we got a confirmation with the lower low. And if you didn't get in then, another good area to get in for a short was right here as well, when we rejected off the 200-day EMA and the uptrending momentum, simultaneously losing both those levels, the key levels. And when we got the lower low, it kind of confirmed acceptance into a previous value area right here. Right, so there's a lot of bearish confluence when we got rejection off that 200-day EMA. When we got that lower low, we confirmed acceptance into the value area here and told us that we're very likely going to get a rotation down to the value area low, or at least the point of control. And a level that I was watching initially was the point of control, but we just broke right through it. We never, we got like a tiny little bounce off it over here. But once those buy orders were gone, we just melted right through it. And then we rotated all the way down to the value area low right here at like around 81,200. So we can now treat Bitcoin as if it's going to behave the same way it did when we were in this range back here. So recently we just broke downtrending momentum within the value area. So we got this downtrending momentum right here. We had a reason to get in. We had reason to get in at when we broke this double bottom structure, right? We broke this double bottom structure here, and we came right to the point of control before getting smacked down. And now we're dancing at the point of control right now, and it's not looking very bullish. It's looking like it's getting ready to come right back down to the value area low. So if we break this local low here, it's not our key change of character zone. Like our change of character zone's right over here. But it is enough to have enough confluence where if we break this and lose the VWAP, then we're likely going to come right back down to 81,200. So what we got in the chat? Happy New Year. Merry Christmas. I don't know if you guys understand what time of the year it is. We got hey, Kyle. And obviously the TA on... Oh, yeah. We'll do TA on Qubic for you, man, every time you're here. Was it number one? Right now, I feel like I might as well say I'm tied with someone for number one. Oh, GP, you're in the lead? Nice, man. Yeah, it ends tomorrow for that tournament, and then we'll start up another one and see how that one goes too. But yeah, so we broke momentum, so it's trying to get a rotation to the value area high, but it looks like it's failing right now off the point of control after grabbing the liquidity from here and hitting the supply concern right here. Right, we hit that resistance, and if we get that lower low, then we could just induce a move further down to the value area low. Now, this range bound activity will be great for a potential reversal, but we also got to prepare for a potential continuation as well. Down here at 76K, there's a lot of liquidity down this little green box zone I've got between 76K and 74K. However, well, there's a lot of people looking at potentially going down to around to like 72K, and that's definitely possible. So just be cautious that if we don't get that an SFP off this wick right here, or reversal structure, that if we start getting full body candle closures in this green box zone, especially on the 4-hour time frame, that we may just go down to 72K before actually getting a strong reversal. So either reverse here, or reverse at 72K. So the key levels that I'm watching, price tag wise, is between 74K and 77K in this green box zone. You guys have access to my chart, so you can monitor how price action might behave when we get down there. But I'd really like to see like a higher time frame SFP off of this liquidity wick right here. If we sweep that, we could get a really good potential front run entry for a strong move to the upside. And then maybe we can actually break this downtrending momentum right here. We have a lot more liquidity above us than we do below us. So if we come down, I don't think it'd be relatively short-lived before we come back up and start grabbing all the liquidity, because there's billions of dollars between like 94K and 96K, and there's tons of liquidity as well around 92K. So short term, it looks like we're likely going to be range bound in this valley area. And then when we break either to the downside, lose the valley area and get a brick structure continuation, then we'll likely come down to the high 70s again, like mid 70s in this green box zone. And worst case scenario, 72K in my opinion is likely the floor. But that's pretty much it for Bitcoin. On chain though, things are resetting to be a little bit more bullish. Like if we think about what's going on in the background, we are getting a better and better reset. And compared to last week, we're already seeing like new investors coming in and old investors going out. Some people even closing at a loss. So that's creating like a stronger reset on the charts, and it could potentially extend our bull market target. On the relative unrealized profits chart, we're at like 1.01, which basically tells us that we're like less than 50% of the way to our bull market top. So this is like what's going on right now is creating a strong cool down period for Bitcoin. It's any of you, Amy, sorry, Tom Struct, trying to say that. How many closures to confirm local, low, or high? Thanks for everything. Local, low, or high. So a confirmation, if that's what you're looking for, you need to have at least 2 candles to pull back and then create a lower low to define that as a confirmation that we're going to be leaving this valley area right here. If we get like a 4-hour closures, 4-hour time frame closures inside this green box zone, then that price acceptance could drag the price down further. And realistically, it only takes about 1 4-hour closure to give you that kind of price acceptance. What you want to see is basically liquidity be taken from the 76,600 low and then have that same candle close back inside the local range during that same moment. If we get the full body closures inside this area, then we're likely going to rotate to the bottom at least at 74.8. And if we don't find support off this 4-hour order block, then we're going to likely go down to 72K. That's like worst case scenario. And a lot of people are asking for it, so it makes me feel like it's not going to happen. So, like a lot of people want to accumulate down those levels. And you can verify all that with the order books. Like there's people waiting at lower prices. But yeah, right now it's looking short-term bearish. We'll see if we hold this neckline. If we hold the neckline, then we could potentially see continuation to the value area high. If we got a lot of confirmation saying that we're going to have that rotation up, but just locally right now, it's looking like it's preparing for a potential drop rotation back down. So we got to hold this neckline level here in confluence with the VWAP as support. If we can hold this level, then we're very likely going to have that full rotation to the value area high again. And at that point, I'll be preparing for shorts. around 84,800 for a local scalp down to at least hopefully to the value area low, but be mindful of the point of control along the way down. Yeah. Happy birthday. All right, so that's pretty much it for Bitcoin technical analysis, unless you guys have any questions. I want to go over the winner. So we had a draw. I'm having drawings now, giveaways every single week to subscribers who comment on my videos and stuff. And I just did the giveaway roll just before this live, and it was at let me see, where did I put it? Oh yeah, social feed. So the winner was the handle's name is Noah Goldowitz. Yeah, Noah Goldowitz. So you're the winner, Noah Goldowitz. I'd recommend just reaching out to me in the Discord. Watch out for impersonators. I'm not asking you for money. I'm going to be giving you money. So yeah, the handle that you can reach out to me with is inside the description of this video. So just reach out and I'll send you your prize. So congratulations, man. Hoorah. The winner, or not the winner of the tournament, but the potential winner of the tournament that we've got going on right now is, let's see here. Yeah, GP said he was the one that's in the lead right now. You're in the lead right now at 19.8% of your capital growth on your account. So congratulations, man. You got, first of all, awesome job with the growth in your account. Everyone's doing good so far in the top 10. Everyone's profitable. But yeah, it'd be $250 for winning this one. I'm hoping that the next prize I'll be able to get you guys will be bigger. But if not, $250 every time for the winner until we get the prize pool a little bit bigger and bigger and bigger over time. But $250 is a good start. Congratulations, man. You probably earn more than that from your trading alone. But yeah. Let's go back to Cluck Cluck. So, CryptoPoy, how you doing, man? You got someone right on your tail though, bro. So just be careful. Yeah, about 8%. Yeah, less than a percentage away. Just don't jump into a trade to try to jump into a trade, right? Make sure you're still safe. Bitcoin on the 15-minute. Yeah, we're approaching this low now. Let's see if we break it. If we break that low, we have the VWAP to be concerned about. And then we can likely see it rotate down to the value area low again. Hootie ho. What's up, Kyle? Yeah, what's up, man? All right. So, yeah, that's pretty much all the things I have to go through for the tournament and for the giveaway. Congratulations to the winner. What else? What assets you guys want to look at? I've got 45 minutes to chill with you guys before I got to jump back into working on the other stuff for Finova and InvestorShare. I'm hoping that we break the low and the VWAP. I'm short on this right now. Nice. So you're probably doing great on your short so far. Your reasoning for the short, was it this liquidity grab up here, rejection of the supply? Yeah, quite a few reasons to jump into a short. Structurally, I don't see a reasoning for me that I would want to jump in a short over here, other than this potential SFP up here. But yeah, if we break this VWAP, I hope you get it, man. If you're in the short, I'm rooting for you. This is the 5-minute posture right now. We got the McDonald's pattern, right? We just got to break we're just mitigated the order blocks down here. We're not seeing a strong reversal off of the order blocks. I got someone trying to call me. Sorry. There we go. We just got to break this VWAP here. Yeah, like you said. Just be careful for the inducement. If you were wanting to jump on this in the confirmation, the safest way, let's say they're late for the short and we get a bounce off the VWAP and then retest the neckline and get a lower low, you would have confirmation of losing the VWAP. You would have a structural guard for your stop loss, and you would have a confirmation for the double top pattern. And the momentum based target for a double top from the neckline to the support level is essentially the order block right here. Right, there's like a 5-minute order block down here. So here you might see a strong bounce, but I still think that even if we get a bounce here, we're likely going to rotate all the way down to the value area low and grab the liquidity from below these lows here. If we pull up the liquidity heat maps, is this the order books? Yep, that's the order books. Let me grab that for you guys. It's liquidation heat maps here. Clate the Great saying he's short on Avalanche at $20.47. I'm praying to the good Lord that we that we dip back to bear market lows. Oh yeah. I'll take a look at AVAX for you then, see how that looks. So yeah, we got liquidity being taken right below the neckline of this McDonald's double top pattern here. $63 million waiting to be taken. And I think if I refresh this, we might have already taken it. No, we're very close. We got roughly around the equal weighted value of liquidity right above the neckline, but if we break this, it'll probably induce volume to bring the price down further. If we zoom back out here, see the age of this range from here to where we currently are is 3 days and 4 hours. So I'm going to go to the liquidity heat map, change the time frame to fit that 3 days within the heat map, and see what we have. We got quite a bit of liquidity from the last 3 days above us. But yeah, like I said before, we have some stacking liquidity from that double bottom, where we had those bounces from the double bottom posture. We have quite a bit of liquidity down there that could be taken first before coming up and grabbing liquidity above us. Let's see what happens when we... That VWAP's really important. Like, you don't want to be jumping into a short unless you're already in a short, but you don't want to be jumping onto a continuation short unless you get that confirmation bounce off this neckline and losing the VWAP. So you have at least a structural guard for your stop loss and the confluence between the formation break, the VWAP break, and the proper risk to reward ratio. Because right now the R&R is like a 1-to-1 without a stop loss guard, because our closest stop loss guard is way up here. Let's see what we got in the chat. Brother, I'm just out here making trades and clapping. Okay, let's take a look at AVAX for Clate the Great. It's the 1 hour time frame that we're looking at right now. We're stacking quite a bit of liquidity through this drop right now. Oh, you're targeting... Oh, you're targeting way down here. Yeah, I don't know about that. So we just bounced off a key level here. There's a bit of hopium. We just grabbed the local liquidity. I'm more thinking that if we're going to come back down, these local lows could be a good target. But right now we're coming back into this range bound price action, this valley area here, similar to how like Bitcoin came out and we're falling back into like a valley area, right? And we're trading within it, right? This is the Bitcoin valley area I'm talking about here. Oops, let me undo that and zoom out on the 15-minute. So we have this valley area here once the candles decide to populate that we're trading within, and AVAX is doing kind of the same thing. So if we zoom out, or zoom in, sorry, onto the hourly time frame, we have this range bound price action here, and we could pull a fixed range volume profile from the start of that range to the point where we exit the range right here. Train view slow today. There we go. You get a horizontal ray. And let's go. Press Alt J for the shortcut if anyone wants to know that. Yeah, so it's kind of this mirroring what Bitcoin's kind of doing in terms of like behavior, where like now, except its point of control is a little bit lower. So we got acceptance into the value area here, fell in, bounced off the value area low like Bitcoin did, and it tried to approach the previous value high. It looks like it's starting to fail, just like Bitcoin is as well. We got a bit of a double top posture, but we're currently at its point of control where we can find support to be taken. It just grabbed local liquidity from this low right here, and that could induce a short-term pump, but this is the local high that could keep it down. I would watch the order books to see if there's sell pressure that could weigh the price down. There could be sellers waiting along this level right here. If we get a rejection here, what you want to see for your short, man, with AVAX is a loss at this point of control, so you can target these lows again here. But you need to have a confirmation of losing that value area if you want to have the target that you currently have. This is my only fear. Just don't be too greedy. Make sure you take some profits so you can compound those gains into your next trade. McDonald's pattern, what type of clown stuff is that about? Well, if you look at the double tops, everyone associates it to like McDonald's stuff, because like if you have a double top and you're banking on your portfolio to make an income, which you should be really cautious about doing, then you could end up making yourself be back and be employed under a job like that. Kyle, can you check out the higher time frames of CVD? I smell a squeeze soon. A lot on giving weird signals. Do I use the GAN fan? I do not use the GAN fan. No. I have tried it out before in the past. I'd say about 3 or 4 years ago. And I just found like it was overcomplicating my trading. And yeah, I don't want to have analysis paralysis. I have like a pretty strict amount of rules that I just constantly do over and over and over again, because I know the statistical outcome of those rules. And stuff like the GAN fan makes it hard for you to know your statistical probability because of how it's like pulled and how you backtest. It's really critical to give yourself, it's kind of overcomplicating stuff. I find it interesting. I just don't use it. All right, so you said you want me to look at CVD. Is that right, CryptoFoyo? Let me take a look at the chat here. Try to find. Just want to make sure I got the right ticker in my mind here. Yeah, higher time frame CVD. All right, let's go to the Bitcoin chart, my primary chart here. CVD. Is that a stock or a cryptocurrency? I got a feeling it's a stock. What you got? Mark Dutch. So he saved $27, not by feeding my now ex-girlfriend. How do I become a millionaire? Kyle, I know it's possible. I've seen your video with Max. Oh, so if you're starting with the same amount of money I did. So I'm just going to let you know about the conditions of trading when I first started versus the conditions of trading today. When I first started trading, the price of Bitcoin was... Wait, let me just go back in time here on the daily chart. This is where I started trading, right here. Okay? During this entire period, up until about here, I was a martingale trader, meaning I traded without a stop loss, which is a nightmarish thing you could do. Like, don't do it. So I was able to grow my account just martingale trading. Back then, you were able to jump into a trade so long as you had the volume requirement of around $7.50. When we came up to around like 13,000, you're able to jump into a trade so long as you have the volume of $13.20. Right? That's how much it costs for a contract to jump into a futures trade. And I was jumping in nonstop without a stop loss, constantly DCAing. I got lucky a few times. It came back up and got me out at a break even. And I grew my account to 15 grand doing it that way. And then we had this Head and Shoulders. And very shortly afterwards, we had the COVID crash. And at that point, I lost half my account. So it was like $8,000. And my wife was trading with me too at the time. I got back into it after 2 weeks because how a loss like that, losing half your account, can have like a huge emotional impact on you. And I was thinking about quitting. My wife ended up quitting. I ended up staying in. Thank God I did. And I just wanted to figure out what the missing piece was. And I revenge traded my way back up with high leverage and doing stupid stuff until this range started happening. And during that range, I decided I need to figure out what am I missing so I can do this full time, because I really, really hated my job. And at this time, I actually quit my job, and I quit too soon. And the emotional impact it had over me was just insane. So every trade felt a lot more important. I wasn't trading with a big enough account size to be able to sustainably do it for a living. So I went to do Uber and figured out what I was missing, and that was like the risk management piece. Trying to, I wanted to figure out how could I scale so I can live off of trading. And the risk management part I was missing. And I learned about momentum as well, like using breaks of structure to define the pace of buyers. And when the pace of buyers start to shift, like it did over here, it gives you an idea of when you should be thinking about closing your position, or at least a partial position. And I was able to grow my account from like 15 grand to 300,000 from a long position, from this confirmation to up here. And I ignored my macro rules at this point because I was kind of too attached, and I didn't sell my Bitcoin. This was all through an inverse perpetual trade. So as I was trading, I was earning Bitcoin, not a stable coin like what most people do. So I sold my Bitcoin up here, and I rebought down here off of the up around 16.9K. And I was able to grow that position to where I'm at today, which is like around just under 4 million. Up here, it's way above 4 million, but right where we currently are, it's just under 4 million. So if you want to start with the $27 account, it's a little bit different because it costs today, you need to have at least $82 worth of volume at the current price. You have to divide the value of the asset by 1,000 to know how much volume you need at least to jump into a trade. So it's a little bit more expensive to jump into a trade today than it used to be back when I first started trading. So just know that like $27, you can do it, because I did it. Anyone can do it if I can do it. So if you're doing it with $27, just know that you're going to be making roughly around like 20 to 40 cents per trade if you're going to do it safely. The people that, and I'm sure there's people watching this that do this, and I'm not trying to like bash you or anything like that, but you can't throw in your entire account and then multiply your account size with leverage. What leverage is technically for is to allow you to jump into multiple trades with the same account size, but you should be risking this like 1% of your account value in each of your trades, or less. You shouldn't be going crazy and throwing in your entire account and not know what you're going to be losing if your stop loss gets hit. You should know you your main priority is to make sure you're at least getting a 1 to 2 risk to reward ratio trade, and that you are consistent with what you are trying to lose. And if you're trading with a $27 account, you should be trying to risk to lose 27 cents to gain double that value or more. And every single one of your trades. And you're going to grow that, and it's going to be really, really boring at the start. But the good thing about starting with a very small account is you are slowly training your emotions to handle a bigger and bigger account size. And a lot of people, what they'll do is they'll start with a large account, not training their emotions. And the trade starts to take control of them, and because their heart starts to race, and they weren't training their risk tolerance to be able to handle a larger account size. With a $27 account, you're going to grow it to $100, and then at that point you'll be risking to lose like a dollar to try to gain $2 or more, and it's going to be small wins. But eventually you're going to get to a $1,000 account size, and then you're going to notice an actual impact of what it can do for your life financially. And then eventually you'll know what kind of account size is required in order to cover your actual monthly expenses. And for most people who have to trade, who have like a scalping strategy, can do really well with a $15,000 account and actually like survive off of a $15,000 account. But you're going to be stressing out with a $15,000 account. If you're trading with a $100,000 account, you can live life you can trade relatively passively and not need to stress about trying to get a trade. For example, like a $15,000 account, you're going to be risking to lose $150 on average to try to gain $300 or more. And depending on your strategy is going to define how many opportunities you get, right? And your profitability rate, like how often are you going to be winning your trades. So you can mathematically equate, so long as you did proper back testing on your strategy, how often you're going to win, how often you're going to lose, and what that's going to mean for you long term by the end of the month, how big your account size should be. And then you can find out whether or not your account size is going to actually allow you to be sustainable as a trader. And if you need to make like $5,000 a month, and you want to do that without stressing out, you might find you might need like a $30,000 account size, based on your strategy, based on your win rates, that you'll be able to cover your expenses with that, with that strategy. Some strategies are also much more, they don't give you very many opportunities. Like my strategy does not give like too many opportunities, but the win rate is relatively high. So I sacrifice opportunity for higher win rate. And then there's those strategies that give you like 5 trades per day, but the win rate's usually lower and lower time frame too. Like you're looking at like 5-minute or 3-minute trading, like Fibonacci, for example, like Fibonacci confluence with like order blocks or VWAP passing. Like there's tons of ways you can just map out rules for yourself, and you'll be able to find out through back testing, like on the looking at the past 200 days on replay mode, exactly how many trades you can expect from your strategy and how many times you should expect to win. And if you look at everything in a logical standpoint and focus on just the data, the numbers, you'll be less emotionally driven to jump into a trade. Because if you're jumping in on emotion, you have no back testing data on like FOMO or FUD, like what that's going to do for you long term. Like I would recommend never jumping on a trade because you feel like you should be jumping into a trade. Jump into a trade when all your rules are met, when you have your checklist in front of you and all your boxes are checked off. Yeah. Otherwise, like I get anxiety thinking about people doing that, because I used to do that. Like I used to jump in because there was a giant green candle and we broke a high or something like that. Yeah, and that always gets you burned. So yeah, man. Just so you know, like if you're trading with $27, that's what it's gonna feel insanely slow to start. But you can compound all your gains, so your next trade is essentially giving you a raise, right? Every time you win a trade, you're giving yourself a raise. There's nothing out there in the world where you could learn something new and have it directly impact your income within that moment and be able to like scale after every single additional like day. So I'd recommend at first doing compound risk management. It's going to be a little bit tedious at first. And then I would recommend focusing on like milestone risk management. And the difference between the two is just like compound risk management, you are going to be like every single trade you do, whether it's a win or a loss, you're going to be risking to lose 1% of the outcome of your previous trade. And your account will grow significantly faster that way. Milestone risk management is what I personally do now, but that's just because I'm at a bigger account size and I don't feel like I need to constantly sprint anymore. And milestone risk management is basically when your account gets, let's say you're a $1,000 account size, it's very easy to know that you should be risking to lose like $10, right? To gain $20 or more, preferably more, but it's whatever the market's going to give us based on your rules, right? Now, when you get your account grows and grows and grows, you can set up a goal that you're not going to change your risk management until the account grows to about, let's say, like 1,500. And then you can risk to lose like $15 to gain $30 or more. So just setting goals for yourself, for your account size before changing your risk can help you be consistent as possible. And you're going to get to a point where there's going to be a mental block. It happens to a lot of traders. It happens to me. And that mental block is basically like you're going to notice like once you get to your account to a certain size, your heart's going to start racing again. And for me, that was risking to lose $1,000 to try to gain 2,000 or more. That's when my heart started racing again in trades. And I had to dial it back until I conditioned myself to be able to handle that. And that's just because my account grew quickly. Like my account grew from like $300,000 to like 4 million. And I was like, my scalping account's bigger now. And my swing trading account's bigger now. And I wanted to use that for trades. And yeah, I had to dial it back to 300 because I can handle 300. I was used to losing 300 to gain 600 or more. But 1,000, my heart was starting to race again. So I had to dial it back, and it took me about 3 months to get over that barrier. Well, that's my advice for you, man. If you're wanting to scale and grow, just be as consistent as you possibly can, and know that when you're starting with an account that small, it's going to be slow and tedious, but never break the rules for what you're playing on risking to lose. Just because your account's smaller, you should still respect your money as much as you possibly can. Every single dollar as a trader is an employee. So, yeah. Alex O'Crypto, I paid you. Check, please. I'll check it out, man. Thank you. Appreciate it. Kyle, are you still planning on doing a video based on the best use for the 11x indicator bundle? Yes. Yeah, I'll be doing a video on that. The Batman video actually ended up being able to I learned a lot about editing with the Batman video, and it's helped me be able to develop ideas for potential videos as well. But yeah, I'll be doing a video on the 11x indicators. I really like their risk management indicator. They're all great. All of them are great. But the risk management one makes me feel good that there's someone out there actually that cares when it comes to the risk management part. I guess it's going to help a lot of the little guys figure out the ropes. But I'll have a video for you guys for that. All right, sorry about the rant. What we have in the chat. You guys are talking quite a bit here. Nice. Kyle, are you? Oh, yeah. Okay, I read that already. You should make a video on this mindset trading. I got a couple in the course. Maybe I can get some out there for you guys. The most highly successful strategy ever found is the quad rotation stochastics. The 9-3, 14-3, 40-4, 60-10 by John Jaresco. However, you have patience on top of that with that. Yeah. Oh, yeah. Every strategy will have a set of rules that you have for yourself. Don't go after a strategy just because it's a higher win rate, because it might not work for you in your time zone as well. Like you should be blocking certain times when you do your back testing to find out if it works for your window of trading. If some people are stuck working a 9 to 5 and they're trying to get out of their 9 to 5 and they jump into trading as a way to replace their income. There's a lot of things you got to watch out for when it comes to doing that. Like the first thing I'd recommend, if you've got a big enough account size and you've already proven to yourself that you're a profitable trader, you should still have a 6-month emergency fund in your bank account that's worth 6 months worth of your expenses. So you don't feel stressed all the time that you need to be jumping into a trade in order to cover your bills. And you want your account size to be big enough to cover 3 times your expenses each individual month, so you can actually expand your finances and not just be stuck in a rut like most of us, are living paycheck to paycheck. With trading, you have a real opportunity to scale out of that problem. You appreciate the rant. Okay, cool. All right. At about 10,000, all right, David saying is where it starts to become potentially income replacing, and your mindset really has to start to change because it's where things really start to snowball. That's 100% right, man. I actually noticed it. I guess it was when I was at like a smaller account size, and I really appreciated my growth when I got to $1,000, because like $10 to gain 20, like that. If you think about it, I was used to making like between 20,000 and 30,000 a year, and I told myself if I could make like $20 in a trade, that I could replace like two and a half hours of work where I used to work, and it feel great to be able to passively make. Well, it feels passive after you get the rules down and stuff. But it feels great to be able to like replace your income as a trader. But yeah, you don't want to quit too soon. You want to make sure you have 6 months worth of emergency funds. You want to make sure that you're making 3 times your expenses and not just cover your expenses. So that way you can build a savings account for yourself or for your kids, or for you to build and to invest in a portfolio that can eventually replace your trading income. Like, cause trading is not like the best thing for you if you want to live life financially free. It's great because you can do it anywhere else in the world, but like you should think about where do you funnel your money from, your profits from your trades. You can put it in like a tax-free savings account, like a TFSA if you're in Canada, or a Roth IRA if you live in the United States. You can put it into, and you want to put those into like dividend stocks so you earn passive income from dividends, and eventually have your dividend portfolio replace your active income and your trading income. Or you can put it into real estate, which is what I'm doing. That's my next stage in my investing career. I want to invest it all into real estate so that I can get tax benefits. You can claim the depreciation of the home, and have something for my kids that I can pass down to them, because I know the housing market's going to feel impossible to get in by the time they're 20, 30 years old. What are your thoughts on trading mostly trend lines, trend break, plus MACD and POC? So trend lines are an amazing tool to tell you the pace of the sellers, the pace of the buyers, and you can use order books to define if those sellers are actually still there, or if it's below you, if buyers are still there. But trend lines, in my opinion, are alert systems, not something you take action on. Like I know traders that take action on trend lines, and it's okay-ish if you have like a good backing win rate for it. But you need to have market structural backing too. If you have a change of character occurrence and then we break a trend line, that's great. But the trend lines, in my opinion, are just alerts. Like, I would not actually take action on them. And they tell you the story of what's going on in the background, right? If you have a downtrending resistance here and you have like uptrending support here, you could see that there's an apex event coming soon. and that eventually we're going to break to the downside or the upside, right? So I use trend lines to tell me like where the measurable targets are and where we're likely going to go if one were to break. And I wouldn't really take action on them unless you see an event like this where other traders are respecting your trend line, right? We have this uptrending support line here, and you see that we've left the value area, we broke a local low, and we're getting a confirmation with a 2-candle pullback and a lower low off the trend line. That's telling you that there are hundreds of other traders backing your trend line. And during that kind of moment, I would take action. But I wouldn't jump into a trade just because a candle closes past it, because the trend lines are relative to your positioning. And if you're not on logarithmic mode down here, your trend lines aren't even telling you the truth anyways. So make sure you have logarithmic mode on if you're going to be using trend lines. Because if you don't, that little button can increase your win rate by like 20%. That little tiny little button. So make sure that's turned on. And if you notice that you don't have it turned on and you click it and your trend lines are all over the place, it's because they weren't positioned relative to the percentage growth of the candlesticks. And if you're set to automatic, it's positioned to the relative size of your screen. So make sure logarithmic is turned on, or else your trend lines are lying to you anyways. I use trend lines all the time to define entries or where to prepare for entries. So for example, I use them for momentum. I see that if we jumped into a long like down here and we lost momentum, that would be a huge warning sign to tell me that I should potentially take some profits, but also does depend on where we are too. Like if we are above a point of control and then we lost the momentum, I might take a small amount off the table and not close my full trade, because I know that I have that point of control to protect my my capital. But if we end up getting a change of character occurrence after hitting a value area high, then I'm very likely to get out entirely. Just like here too, broke momentum to the downside. We got a double bottom, break of structure, continuation, candle close above the VWAP. I probably would have entered there, stop loss there, target the high until we lose momentum. That's how I use my trend lines when I use them. And I like to look at the momentum, not in just a micro scale, because this is all internal, but I also look at it in a macro scale too, on the daily. But yeah, going well. Okay, you guys are talking amongst each other. Is have financial security before jumping into full-time trading. Also have your rules for trading, your win rate, and your emotions to check first. Kyle's course has solidified that in my brain. Nice, man. Kyle, I spent $150 on golf balls today. I bet you probably did. That's crazy. What? Yeah, we had a TA request on Qubic. So we can look at Qubic really quick. Let's pull that up. I think we have a Qubic chart now, right? Qubic. We do. Okay, cool. Last time we looked at it was on the 25th. Well, we have a monthly candle close coming up soon, so I'm going to look at the monthly too. So Qubic, yeah, we lost uptrending momentum here on the 19th. We confirmed it as a resistance, lost the POC, then rotated down below this value area. Then we came up, hit the POC, and we've been on a downtrend ever since. The positioning, we have a value area here that we're within. So let me just pull a fixed range from the start of consolidation to the point where we left the value area right here. Get a value area low. The POC. So like what I'm seeing right now, so we came down after losing this value area. We had the local lows act as resistance, And then we got acceptance into this previous value area right here that we've got drawn. And we bounced up the value area low. We didn't hold it for very long. And now we are kind of like getting below this little value area as a form of resistance. We're constantly combating this previous point of control right here as a form of resistance after recently grabbing the liquidity from below this low right here. And let's take a look. Like structurally right now, it looks like there's signs of accumulation. We grabbed local liquidity. We got a good bounce from it. We grabbed the liquidity from the newly added liquidity from here, and we got a really strong bounce from it. So we're seeing signs of accumulation, right? Kind of Wyckoff accumulation. We're just combating this point of control as a huge barrier right now for Qubic. What I'd like to see for a potential long opportunity for Qubic is to break that point of control and give us a break of structure continuation. And we can use, right now, this is the low that we'd use as our stop loss guard. And we can start targeting we have to be mindful of the previous value area low here that we used as support. That would be our first barrier, yeah. What we want to see is get basically acceptance back up here. Otherwise, this would be your primary or barrier concern at this previous value area low. Like 9778. We can see that act as resistance and rotate us back down and begin range bound. But yeah, that's the main boss. If you break past that, then your position's going to look really golden, and I'll be targeting this previous value area high up here. But it's just really high risk trading something like Qubic. And that's another thing too. If you're wanting to be a day trader, you pick your assets carefully. You don't want to be picking, like Qubic's a great investment, but not something to trade with. If you look at these wicks and how much it disrespects market structure, like you want to make sure that when you have a strong low for your stop loss, that strong low isn't just going to be wicked out and gives a change of character, then gives another change of character, another change of character, and then go up like the direction that you predicted. It's really frustrating when you see assets do that. So pick assets that respect their strong lows and strong highs the most, so you can have a clear, like very clear and easy trade setups that won't come back down and try to stop you out. Sorry, a million phone calls. What would be your favorite most used indicator? I have a favorite and then I have a most used. I would say the VWAP is the most used one I have, and the fixed range volume profile. Like these two are my most used. VWAP, and I could trade without the RSI because I can visualize how the RSI is behaving. I can trade without the volume indicator because the only time I technically need the volume indicator in my mind is if we have a doji. If we have a doji like this, like a candlestick that has, like this is the body here, and we have like a wick here and a wick here. That's the only time I typically feel like I need the volume indicator, because when you see a doji, sometimes there's a volume battle and you don't realize it's happening. But when highs are broken, typically it requires volume. And if you look at the order books and you see that there's a giant sell wall, we know mathematically how much volume is going to be required to break that sell wall. I have a really hard time picking favorites. I'm sorry. So VWAP is great. Fixed range volume profile is great. I could trade without the fixed range volume profile because I can visualize where the value area lows or value area highs are. I can visualize where the point of control is just by looking at the structure. And the order books, I really like too. These guys here. The order books is like looking both ways before crossing the road. Am I going to get hit by a car if I jump into this trade? That's basically what I treat the order books like. If you see a giant sell wall in front of your face and you jump into a long, now you have to worry about that sell wall constantly driving the price down, right? My favorite indicator, those are the ones I use, okay? So I know I'm not answering this question properly, but my favorite indicator is technically like the TD sequential. But they got rid of it, but now there's like a different version of it. Yeah, CC, I think is the one that you CC Yada. Let me take a look and see if that's the right one. Yeah, so this one's technically my favorite. This thing's made me quite a bit of money in the past. It is counting consecutive candles that are profitable or bearish or going in the same consecutive order. If you see a 9 flash, it's a huge reversal warning, or just a reversal warning. So if you see a 9 flash, either be bearish or bullish, it's a huge reversal warning. So we got a bullish one here and we got a bearish one here. Now there are short-term reversal warnings. They're not going to give you a massive like edge in knowing where the exact bottoms are or the exact tops are, but it's a really fun indicator to prepare. You can set alarms off of them. Right, there's another 9 flash here, warning you of a reversal. Again, they won't tell you how far, but they'll tell you that it's very likely going to give you a reversal soon. And then you have to look at the barriers. So you can set rules off of this. Like, for example, I will not enter a trade unless I have bullish divergence and a green 9 flash in confluence with being at the value area low. There's a set of rules that you could backtest. Or I will not enter a short unless we have a bearish 9 flash at a top of the value area high with bearish divergence. And that could be a really good set of rules too. I don't know if those rules are good or not. You have to backtest it. But that's kind of like what it means to be a trader when you're trying to like decide what you want to do for your set of rules. It's just like figure out how things are behaving at your favorite levels, whether it be at key levels like at a high or a local low, and see how that indicator behaves at those lows or highs, and then you can find out what kind of rules you want to set for yourself with your indicators. And then just go in replay mode, test it for 2 years, test it in a bearish environment, test it in a bullish environment, so you see if your rules work for you in both market conditions. Because sometimes there's strategies out there that don't work well during a bull market. There's sometimes there's strategies out there that don't work well during a bear market. Yeah. Can I type it in the chat? Yeah, the CC Yada, if I look this up without looking at my favorites here. It used to be called the TD sequential, but something happened with TradingView where they took it down because it broke terms or something weird like that. All right, so we broke the neckline, guys. We got at least a 2 candle pullback. We bounced off the VWAP. So our last condition, if you wanted to jump in on a short or a continuation, would be a break of this low, because what will happen simultaneously is us losing the VWAP, and you'd have a high for a guard. The momentum-based target's down here, based on this double top pattern. But we could see price action go all the way down to the value area low again, grabbing all the liquidity from down below here. We grabbed all the liquidity that was right below this neckline. As we look at the liquidity heat maps, see how it's yellow there. Now if I refresh, we can see that it was all taken. So we have, technically, locally, we have more liquidity above us than we do below us. So that's why we got to wait for that confirmation, or else we could be coming up to grab that liquidity at 84,077. So things are looking bearish, but we just got to make sure we confirm it as bearish if you're not already in on like an SFP up here. So the pathing would look like, basically this is the last thing you need for a short. So you can put a horizontal ray. If you're someone who's busy, when you know what condition needs to be met before you jump into a trade, you can save yourself a lot of screen time by setting up alarms. You don't need to stare at the screen waiting for this. Right? You can set alarms. The great thing about trading is you can pick up a whole bunch of new cool skills while you're waiting for things to confirm. You can play guitar, play piano, start a side hustle, whatever you want to do while you wait for your alarms to be hit, and that's be the only time where it actually technically is appropriate for you to look at the screen, right? You don't want to be I know traders that are brand new and they stare at the screens for like 8 to 12 hours a day trying to figure things out. And it's good, well, if you have your set of rules in play, you can use that time while you're waiting for things to confirm to learn, right? To add more knowledge. All right, so that's what we're waiting on there. Yeah, David saying alarms are wonderful and a stress remover. Yeah, exactly. I find that the more time you invest looking at your screen too while waiting for a setup, the more prone you are to emotional involvement in your trade. Yeah, Alex Crypto's strategy with his levels, his key levels, like having a strategy like that and having a front run alarm to tell you when you're getting to your zone. Like if you're looking at your 786 level, you're going pocket level, and you have that box zone, you can set up a trend line for an alert right above it, so you're notified when to bring yourself to the computer and prepare. Me, I like to look for change of characters. After we get to like a value area low or value area high, I will mark a change of character level, and I'll also mark a local high to tell me that the change of character level has changed. So for example, let's see if I can find a good example for you guys. If I would have an alarm for, let's say, this level right here, right? Because we got this higher high to tell me I can prepare for a potential short, or I can set an alarm for the high as well to tell me that my change of character level may change. So I might have to rotate my alarms. Yeah. You do not need to stare at the screen all day. And the better you get with your alarms, the more technically you get paid per hour as a trader. If you think of it like an hourly rate, you would find more value in trying to reduce your screen time. And if your goal is to make this something that's a little bit more passive for yourself, or if you want to spend more time with your family, and that's the whole reason why you're doing this, then yeah, learning how to set alarms is really key for reducing your screen time. Ooh, you guys sending DMs to each other. I spent time learning price action. Yeah. The price actions, you can learn quite a bit on the 1 minute chart too. Just make sure if you're jumping on the 1 minute chart you're using a chart with a lot of liquidity, like buy bits chart, so you don't have crazy gaps. Like for example, I like to use Bitstamp, which is the chart I'm on right now, but it's not really great for scalping because you sometimes have like crazy gaps between each one of your candles. But this, like here's a gap right here. But this chart's great for macro indicators and stuff like that because you're getting all the historical data. You have a time zone for Bitcoin regarding a big move to the upside, considering your time in the market and your experience. Yeah, so like a time that I would recommend, if you want to be like an active day trader, you want to be trading where the volume is. And where the volume usually is on the New York session. So I normally would recommend the New York session, but it also depends like where you live. Are you going to be awake during that time? New York session is a session for liquidity hunters. So you got to be aware of like where the key levels are for putting your stop loss, so you don't end up becoming a part of the liquidity. So yeah. And then if you want to narrow it down even further than that, I would recommend the silver bullet periods, which is where like a massive amount of volume usually comes in. It's like around like 11 a.m. Eastern Standard Time is usually where like a huge burst of volume comes in before their break, and then we go into the PM side of the session and the volume starts to pick up again. The Tokyo session, they're mechanical based traders on that side. You normally get a huge burst of volume and then it dies for the rest of the night. I used to, when I first started trading, I would try to stay up till like 2 a.m. for that Tokyo session, like crazy volume burst. and then it just dies, and I'll just try to predict the direction. And yeah, I did that a lot. I don't do that anymore, but the Tokyo session is kind of fun for that. And there's the London session, which is all right. It's like, I think it's the second largest volume session, but there's this period where the New York session and the London session mix, and you don't want to be trading during that time, because you have two different types of market makers combating with each other, and normally forces things into a range. So if you get a confirmation with like a higher high or a lower low, whatever you're looking for your confirmation, we tend to be range bound during that period because the clash between the market makers. Tokyo is so darn weird with their trading. Yeah, they are. Yeah. So just to get a vibe on like how Tokyo like looks at historical data to define how profitable a day is, and they'll look at that data to help define their bias for their trading. And if we go to like coinglass.com/today, if I can type, it gives you like a huge edge in knowing what the Tokyo session market makers might be thinking. So you can go to the monthly returns, but you can go all the way down to the daily returns and bring yourself to March. And you can see, for example, like the 29th of February, we've had a day where only 2 days in history were bearish, right? So if you're trading on the Tokyo session, having the lead on the daily candle, they use that data to help define their bias for the day. And you find like the 29th is a very bullish day, you should be only focusing on longs when your rules have confirmed. So that's what I mean by bias control. Is picking, are you only going to be doing shorts that day or only doing longs that day? And a lot of people use moving averages for that, but the Tokyo session uses data like this for that. So they will look for only longs. Doesn't mean they're going to be jumping into a long, but if all their rules are met and it's a very bullish day, that means they're going to be focusing on only longs. On the 3rd of March is another example, but on a bearish sense, right? We've only ever had 3 days that were bullish. The rest of them were bearish. So your bias for that day would be bearish. And this is all based on like micro-analyzing seasonality. And like for example, like April's are usually bullish. We're going into April, and it's usually because of the economy. A lot of people are getting their money from tax returns. So historically, we normally have a bullish April. Where's that chart? I just mentioned it. Here, I'll type it out in the chat for you. coinglass.com/today. It's free to use. If we zoom into where we're currently at, we've had, with the 30th, yesterday, most days were bullish. We barely had a bullish day. It's like 0.9%. If you notice that days are kind of half and half, then you don't use it for bias control during that day. Or some people might not even trade, because if they're using it based on the rules and they don't have clear direction of based on historical data, then they might not trade for that day. Let's go into April. And our April, now we're looking at, let's say April 1st is tomorrow, right? Most April 1sts are bullish. The average median is bullish. Our last 2 Aprils were bearish, or last few Aprils were bearish, but on average it's mostly bullish. So statistically, we'll have a larger chance of having a bullish day on the 1st. And then you can cross-reference that data by looking at the monthly candle for this month and the weekly candles to give you an edge in knowing what is the actual statistical probability of us going up. We're having a doji on the weekly right now that closes in 6 days and 4 hours. Our previous week was bearish engulfing candle. So like just by looking at that posture alone, it looks more bearish short term. So we could be having a pullback to these lows here. If we go to the monthly chart, I haven't looked at the monthly in I guess a month. Yeah, the monthly is we're getting a doji. Where yeah, the monthly's below the 200-day EMA as well. Well, everything below that. Yeah, we've got yeah, doji's a huge state of indecision. So we'll see what happens on our next following month. But statistically, April's more bullish. So we might see it. We'll see it likely close above 84,400 next month at least. Thanks for all the support, bro. No problem, man. Any quick and easy use trading techniques to use while working, so I'm still able to trade on your phone. On your phone, you're not able to look left very well. So if you're, I recommend like a mechanical based strategy especially if you're a beginner. Like the Bollinger Band strategy that I teach in the course. Like that's a good one to do on your phone. But there's not very many opportunities with that strategy because it depends on like the hourly. If you want to have the highest back tested win rate. I'm not gonna read that out loud. Tuesday to Thursday type, yeah. Yeah, Mondays there's not very like sometimes there's quite a bit of liquidity grabs on Mondays, but it seems like Mondays is more of a preparation day for most traders. So a lot of the volume is between like you said, between Tuesday and Thursday. On Fridays, it's a bit of a cool down. People are like hesitant of jumping into positions when there's less liquidity during the weekend. There's less market maker activity, and for some people, they might think, oh, less market makers means you can get away with more. They're not going to try to hunt you out. But you want to be at a level as a trader where you're able to use the market makers as a tool and not worry about them being like a weapon. Because if you can trade alongside the market maker and understand what they're trying to go after, then you can use that in confluence with your data set of rules and become far more profitable that way. All market makers they're people that are painting a picture for us so they can influence retail to bring it to the direction that they want to go to so they can capture a gap in their profits. Like valley areas are great because they give you an idea of where the market makers are trying to control the price, right? The more it ranges for them, typically the better. Yeah. I know what that laugh was about. Yeah. Have we done ZR? Oh, I got asked to do Ethereum, ZRO, and then I can do TIA. So opening Ethereum really quick. Ethereum got its butt kicked. Okay, so we're gotten down to this zone here. We delete this. We don't need this anymore. I think it was the last time we were. Yeah, we're looking at this level here for a short-term short, and then we got to bounce off of the local resistance as support, and then we got a higher high, and then we kind of like mitigated some of this supply risk, and then we came back down. We really, really wanted to see, or at least I did. I wanted to see this 2050 level act as support and then a higher high. But we never got the higher high. We stacked a bunch of liquidity here. So I was thinking that we could go for that higher high, but instead, we never confirmed it, and we started falling back down. We got let's delete this. Okay. Now we're deviated below this previous valley area low right here, right? And we're kind of use it as a form of resistance after bouncing off as support. We've got a change of character occurrence, which is bullish, right? When we broke this local high here. And if you use changes of character as a part of your rules, you tend to sometimes get a pullback after the change of character is created, but we normally don't take the low. We normally don't take the low after a change of character is taken, because this is now defined as the strong low at this point. What we want to see for most people to jump in, you might grab the impulse fib from the local low to the high and box a zone where it could retrace back down to get in, since it's already confirmed a likely reversal here. But what we're lacking is the confluence of acceptance into a valley area. If we jump in here for any reason, I'd be very, very mindful of this high potentially acting as resistance. That should be your take profit 1. And if we break past that, then great, because then we can probably get acceptance to the valley area, and then you can extend your target beyond the local barrier of this high, and you could focus on any internal barriers along the way up to the valley area high. And this would be the internal barrier here, the supply risk right here. But if we get acceptance to that valley area, you could target up here. Just be mindful of this. So Ethereum's looking short-term bullish. I know it's pulling back right now, but from this liquidity grab, it's used as exit liquidity right now. I want to see this bounce and then give us a higher high and acceptance to the value area, and then we'll be running back up to 1930. But right now, the retrace level that I would be watching is around 1806. You could box this zone and wait for a lower time frame internal change of character occurrence within that zone. And we got a wick there for that liquidity inducement, liquidity grab as well. What we got in the chat here. So that was Ethereum. Zero and TIA was the other requests. I think we got a TIA chart, so I can start there. Bitcoin's pullback. We're coming back up. We might be getting that lower low soon. We get that lower low, then we get the VWAP confluence break. We can target the value area low. While we're waiting for that, we got 8 minutes before that candle closes anyways. I like to wait for candle closures, because candle closures is a form of price acceptance, especially on the 15-minute when you have a ton of trade participants that back what happens with the candle close on the 15-minute. I've back tested the living crap out of that. Now we go to, was it zero? Oh, let's do TIA first, right? We don't have a TIA chart. I thought I had a TIA chart. We'll look at zero then. This is a layer 0 project. Okay. So zero on the 15-minute is fighting the VWAP in confluence with the 50-day EMA. Right here's the 50-day. So we got a lot of confluence for a rejection here, and we got the posture of this kind of behavior is bearish. It's like it's bullish while it's active, of course, but it usually creates a break to the downside internally, and then you want to target these lows here. You know, right now the key level is pretty low. It's right here. Like if you're not in up here, then this is where your key area would be, unless we capture that high. If we capture that high instead of breaking this low, then we could actually have it extend up to $2.90. Let's zoom out though. Yeah, so we just got rejected off of the 200-day EMA. It's got a little bit of relative strength against Bitcoin, just because it's positioning against its moving averages. we're building a bit of a bull flag. So like what's usually happening from these bull flags and why they usually tend to break to the upside is because of where liquidity is usually taken and added, right? So if you're trying to understand why bull flags normally break to the upside statistically, is because of the statistical outcome of how the liquidity is generated, right? We have liquidity stacking here, stacking here, stacking here, but it's being taken here, right? And we can come down, take some more before going up. So we bounced off this local demand zone right here. So this could have been the last bounce before we potentially break to the upside and grab the liquidity up here. If not, we'll grab the liquidity again. But we do not want to have happen, or else this will invalidate the flag breaking to the upside, is basically too long of acceptance inside of this demand zone here. Because we have too many candle closes and we get a rejection up here and we get acceptance within with a break of structure, then we'll likely break this to the downside and continue going down or start going range bound. But zero, like structurally, like depending on like based on what it's doing right now, it does look like it's preparing for a potential move, or at least a short-term move to the upside. But internally right now, we look like we're coming down to grab the local liquidity within before potentially retesting these highs again. I'm going to jump back to Bitcoin, and then we're going to look at, we have 4 minutes and 48 seconds left. And we just need this body to close pretty much where it's at or a tiny bit lower. No problem, man. Short Bitcoin. Yeah, Bitcoin is looking ready for a short. We're just waiting for the confirmation for that drop. And if you're jumping in on this, just be aware of the local barriers. We have liquidity here. If we SFP around that area, we could come back up to target its local highs. Right now, this is the only local high that we know of. We could start targeting there. And the VWAP will likely reset before we start targeting those local highs if we get an SFP down there. And the VWAP reset could help back a pump. Because right now, if we close below the VWAP, it's going to act as resistance. But when it resets, it could act as support. Just like it did here. After it reset here, it came back down here, and started being honored as a form of support. And it resets when the daily candle closes, so just be aware of that. So this is a 1-2.23. I'm going to show you guys the 11x indicator that you could use during a situation like this. So 11x, they have a risk management indicator right here. If you were to be jumping in on a long, your first click is your entry price, your second click is your stop loss price, and your third is your take profit. And then from here, it'll show you what kind of trading balance you're trading with. So if you're trading with $1,000, you would be risking to lose like $10 with your budget to try to gain $20 or more. Your leverage, it says you can put in your preferred leverage, but your leverage should be limited to based on the drawdown risk of your trade. So right now, this is a 0.59% or 0.6 if you want to round it up a bit, percentage loss. So you couldn't trade with leverage over like 100x, for example, or you can get liquidated before it even hits your stop loss. But I'd recommend like maybe like 4 or 4x leverage. Depends on your trading style. Usually the lower the leverage, the better in the sense where it reduces trading fees. However, you could use your liquidation level as an additional protection in case the price action surpasses your stop loss. So there are these situations sometimes that happens to a lot of traders where you could have slippage occur from high volume, and even though you had your stop loss set here, you could end up having your trade close like way up here, for example. Raise your hand if you ever had that happen to you, because it happened to me at least 6 times since I started trading. And what you could do instead to prevent in a case like a case like that is you can mathematically equate when you'll be liquidated if it were going to go past your stop loss. So if you wanted to get liquidated and price went right about here, the only thing that would be at risk in that trade would be, especially if you're using isolated margin, hopefully you're using isolated margin, not cross, that would make it so that you're able to protect your capital in a way where if it surpassed your stop loss in a high slippage event, that you won't lose more than your budget. You'd get hit by like liquidation fees, which is a little bit higher than like a stop loss fee, but it's well worth it to protect your capital. And that's a way where I'd prefer, if people are going to be using high leverage, that would be the reasoning behind it. But you still want to make sure that your budget is consistent and the same, right? If you want to, like, if you're risking to lose $10, make sure that you're going to be risking to lose $10 with your budget, no matter what your leverage choice is. It just means you'll be putting less margin into the trade, right? In this case, I used 11x here. Let me just bring this to visual order, bring to front. So I use 11x here with an account size of 1,000, right? It's telling me if I use 4x leverage with this particular setup that I would need the margin size of $408.80 if I want to make sure that I'm only going to be risking to lose that $10, right? And my objective with my risk to reward ratio being a 1 to 2.14 would be to gain about $21.40. And it shows here $21.44. Now, one thing that's really cool about this tool as well, which I didn't input correctly when I used it, sec here. So I entered here, stop loss here, target here. Let's say 4x leverage again. $10 loss on a $1,000 account. You can put in your fees. So the average maker fee is 0.025. The average taker fee is 0.06. If you apply that, it will also tell you how much your fees are likely going to cost you. So $1.62 if you use 4x leverage. And you'll see that the fees will scale the more leverage that you use. The one thing that's really interesting is they'll give you a visual indication, like this red dotted line represents when you're actually going to be in break even, right? Because after you open and close your trade, it's going to cost you money. So this will give you that gap in knowledge and knowing where when the price action surpasses a certain key level, where you're actually going to be at your break-even point after the fees. So we got the body closure below the VWAP, but we didn't get it below our level here that we wanted to have. So right now we're getting a little bit of a tiny bit of a bounce. But there's a lot more time. There's like 12 minutes left on this candle still, so we could still get that closure. Are you going to look for an inverse perpetual on Bitcoin or Ethereum? So I would say yes, but I can't trade inverse perpetual anymore. I don't have an exchange that allows me to do that. So hopefully, if you had inverse perpetual, I would say yes. I would prepare for a potential inverse perpetual setup on especially Ethereum right now. Like Ethereum's in a good spot to prepare for something like that because you could end up being in a long-term trade based on Ethereum's positioning. Bitcoin, it's a big fat maybe. We're going to see how the dominance plays out, but we're at levels soon for Bitcoin where I would say prepare for an inverse perpetual trade. Like if we're down here around 77K, like that would be a great spot to prepare for an inverse perpetual trade. Do you have any favorite trading technique with more possibilities and still good win rates? Have you learnt about the trend hunter strategy that I put in the course? I know you've got access to it, man. So like that one's okay, but it doesn't give you very many opportunities. So if you're looking for something more opportunities, like I got my strategy that I teach everybody. Just like if other people know my strategy, it won't invalidate it with more people that learn it. Because I'm using the market maker as a tool most of the time, so it won't invalidate it. We could always develop a new one together as a team. It just requires a lot of backtesting. All right. What was the other request? So we want to look at VRO for... I'm trying to find your name here, man. Or ZRO. We looked at ZRO. Trying to remember the other request. Tia. Yeah, Tia is another good one. Let's see what Tia is doing. I thought I had a Tia chart, but I guess not. Look at that crazy wick on Binance chart. It's been a while since I looked at it on here. It's this long position here, right? Preparing for that big move. Let's pull Tia's. This is the hourly time frame. Tia right now is approaching a value area low. We lost its value area high here as support. We've got like a rounded top or head and shoulders pattern, and we look at the lower time frames. We could see that we got, well, even the hourly, you can see it. We came up, we got a rejection off the value area high in confluence with that head and shoulders, and we got the lower low. The confluence of the lower low gave us a break below the 50-day EMA, and that's what triggered this drop. So this would have been a really safe short, extremely safe short. And you could target at least the point of control, or maybe even the value area low, which where we're heading right now. The current posture is looking like we're going to have a very explosive move to the upside based on the order flow of this drop. Whenever you see like these V-shaped recoveries and then like slow drops, they tend to give us an explosive move to the upside because of how the liquidity is forming. Every single time you see a break of structure, you can assume that trades have been placed, like there are stop losses and high liquidation leverage traders in play, and it just adds more and more liquidity. Now this wick here, I'm not sure how valid this wick is on other exchanges, but we can see on the Binance chart that all the liquidity that was added through here was very, very likely taken, and the new liquidity is being added right now. So this kind of makes the chances of a reversal weaker, right? Because there's less reasoning for us to come up because of the liquidity being taken here. But we still have reason coming up as we generate more and more liquidity and we start approaching levels of support where buyers tend to be. We're coming down to like this demand zone here, right? So if we come down and we hit this hourly, what's that, an hourly order block? Yeah, hourly order block in confluence with the value area low. This could be an area where we can prepare for a change of character occurrence and give us a rotation back up to the value area high. And of course, being extremely mindful of the point of control along the way up. Like this could be a barrier where we get a reversal. If you get a change of character, internal change of character, I would be thinking about closing some of your trade and moving your stop loss to break even. So this is like a zone where you're going to definitely want to prepare for longs. Just make sure you wait for that confirmation first. Because we've been range bound here for a little bit now. We've been range bound here for 56 days. Yeah, so like we're coming down to a high time frame reversal point. A strong reversal shelf, like a strong volume shelf here. So got tons of confluence at $2.97 to prepare for potential longs. And actually, you know what I'm going to do? I'm going to put a front run stop, like a front run alert right here. Oops, my bad. Just to prepare myself for when price actually gets down here for TIA, because I think I might jump in on something like this. I think this is a kind of like a really good play, in my opinion. A good zone to prepare for the rest of the rules to be met. Because again, like my rules, for anyone who doesn't know already, like I screen them all the time. So I want to see a break of momentum. Right? That's this dotted line here. The pace of the sellers, right? That tells me to prepare. It doesn't tell me to enter. It tells me to prepare to exit potential shorts and to prepare to enter potential longs. And then once we break that momentum, I want to see a change of character occurrence, right? So right now, that's like a little high, but if we get a high here and a new low taken, then we can have this strong high taken for the change of character occurrence. If we deviate a little bit down below, it's fine. That just means you get better risk to reward ratio. But make sure you have a proper acceptance into the value area if you're going to be jumping in around this level. If we end up going down further, then you're going to have to watch this value area as a potential barrier in your trade. So you have to set alerts in case we don't get acceptance back in to rotate to the value high again. So very good spot to prepare for longs. So I'm going to set an alarm here for an hourly candle to close, once per bar close, at this. Oh, no, let's do only once because it's at an order block. So I'm going to set an alarm for when we get there so I can prepare. And I'll give anyone who's part of the community, I'll give you guys a signal of when I decide to enter that trade. Bottom in on Jupiter. I don't really see a bottom in on anything until I see bottom in on Bitcoin. Let's see if Jupiter has relative strength though. Do we have a Jupiter chart? No. Okay. We don't have a TIA chart, so I'm gonna clone this right now. Let's make a copy. TIA. Okay, and then let's go to Jupiter. Binance. Okay. Yeah, last time we looked at Jupiter, we had this uptrending level of momentum here. We had a horizontal key level at 53.61. Just gonna see why I have that marked. Okay, previous barrier concern. And Jupiter is now in price discovery. Oh boy. Well, that's not good. So this is where things get more psychological. Well, psychologically important at least. So a lot of people don't realize this, but based on the time frame you're looking at, you'll see these horizontal lines on your trading view chart. Those are psychological levels, rounded price action levels that are important to that time frame. So those are levels where you want to look at the order books and see if there's tons of buyers waiting there to help validate that there likely is going to be a reversal there. The key level right now for Jupiter on the hourly time frame is way up here. We want to have 43.49 to be broken to be considered a potential position of strength. Like you want to make sure if you're thinking about buying Jupiter for a long-term hold, just make sure if you're going to be buying it that you're getting in a position of strength. And I'm pretty sure Jupiter's very inflationary. So just be cautionary on that too. If you have an inflationary asset like Uniswap's token or Radium or PancakeSwap, all these tokens have crazy high inflation. in order to distribute rewards to their holders that encourages them to place liquidity on their exchanges so their team can make money off your trades. And that normally means a forever downtrend, macro-wise. Like higher highs, like the all-time highs never being claimed ever again kind of possibility. So like Jupiter might be good for potential short-term holds to get really good gains, but don't hold it thinking that it can reach its all-time highs over and over again, like for like a 4-year or 8-year hold, when it's constantly creating more and more supply in order for them to distribute rewards to their holders. Pick the assets. If you want something for a long-term hold, like 4 years, 8 years, make sure you pick assets that have tokenomic backing, like Bitcoin's a good example. A finite supply, like that has a cap to its supply, or has a deflationary supply where the supply keeps decreasing. If they have no cap to their limit, just be very cautious. We did just grab local liquidity just now. If we break this local high here, it can allow us to target this high here, but just be very cautious with the VWAP along the way. That may reset before we break this high, depending on how slow we decide to climb. I doubt, actually we got about 3 hours before the daily candle closes, so we might break this, test this, and it'll reset somewhere within here. But if we break this, then you have to watch the next local high here. We went range bound here, so we can see this act as a form of resistance. As the reason why these lows, that was once support, usually acts as a form of resistance is because there were buyers here that may want to exit as soon as we get back up there. Just be aware that there's a lot of people's local averages are here, so that could act as a form of resistance too. So that's our next area of concern. Yeah, you don't want to be, yeah, this thing's in price discovery, so be very, very cautious. You might think you're jumping in now at like a cheap price, but the price can definitely get lower and lower. When things are in price discovery, like some things get pretty wild, so be careful. GP, like Karma, exactly like Karma. Constantly has a cap to its supply, and it's constantly burning tokens, so it's deflationary. Okay, so that's Jupiter. Can we look at Bitcoin? Yeah, let's jump back at Bitcoin. We got a small little bounce. We haven't confirmed anything just yet for a potential short. The good thing about this is a liquidity inducement. So we zoom in on liquidity heat maps. We'll see if maybe we got more liquidity added below us. A little bit, not very much. $10 million was just added from that tiny little bounce. At least locally. There actually does look like there's more stacked down now below us. I think people are a little too cocky. If we break this high here, the point of control in this downtrending momentum would be confluence for a potential short too. That's if things start to reverse on us. But this is a great level to prepare for a drop. If we break this high, it also invalidates our current stop loss guard. Thanks for the Karma airdrop. No problem, man. Well, I gotta head out, guys. Sorry, what does inverse perpetual mean? Blackwater, to answer that question, man. Inverse perpetual is the reason why I'm where I'm at today, if I'm being honest. So inverse perpetual is a different form of trading style where you are, rather than using your USDT as liquidity, right? When you jump into your trades, most of you guys are aware that you're risking to lose USDT to try to gain more USDT. Inverse perpetual, instead of using your USDT as collateral to gain USDT, I can't say that 10 times fast. You're using an asset instead. So in this case, it could be Bitcoin. So if you're using your Bitcoin as collateral in an inverse perpetual trade, you'll be gaining Bitcoin when you win your trades. You'll be losing your Bitcoin when you lose your trades. It's a good way to jump in on a trade, particularly longs mathematically, because you'd make more money than someone jumping into an equal margin position size if they were using USDT, because the appreciation of your asset is going up while also the value of your trade is making you some money too. So USD inverse perpetual trading, or also known as coin margin now, that they rebranded it to coin margin, which makes more sense for beginners. Coin margin or USD or inverse perpetual is just a way of using your asset as collateral so you can gain more of that asset. It's what allowed me to turn 10 Bitcoin into a 20 Bitcoin position using 2x leverage, and to grow a total of 40 Bitcoin in capital in my most recent large macro trade. So inverse perpetual is a huge opportunity if you have a bullish setup. But I would not recommend inverse perpetual to most people, because it's how you manage your risk is slightly different. I only do it for big macro swing trades. You can do it for scalping, but the problem with doing it with scalping is that inverse perpetual typically has less activity in the order books, and you deal with crazy slippage. So doing short-term ranges like this, or anything within here, or within here, it's just you're giving up. You'll be entering here, but then you'll notice that your position's way up here when you're jumping along because of the slippage. So there's just not as many trade participants using it. And I've got a feeling, I'm sorry if that triggered a song in guys' head, but I got a feeling that inverse perpetual or coin margin is going to be less and less of a thing if we have a supply shock coming for Bitcoin. Because we are kind of getting ready for a supply shock event, right? So they might delist the ability to do inverse perpetual on most exchanges. I did it on Bybit. It was amazing on Bybit. I did it on BitGet, and I did it on BingX. But the reason why I'm not doing it anymore is because of KYC. They are not allowing me to trade on those exchanges with where I live right now, so I can't trade on them. Your thoughts on Fibonacci retracement? Do I use it? I do not use it, but I am working on using it. I was very biased against using Fibonacci when I first started trading, because of the fact that when I first started trading, I was backtesting every single word that was told to me on YouTube. I learned most of what I know today from YouTube, but I had a problem with trusting people after getting burned a couple times, trying to follow them, right? I'm sure you guys been through it before. And so what I started doing was backtesting what they were saying. Is this actually true? So I'd go back in time on replay mode and practice every single, go through the exact rules that they told us to jump in on, basically. And if I found that the results were garbage, I know not to listen to that YouTuber anymore, right? Because they're lying for clicks. With Fibonacci, I wasn't a great trader when I back tested Fibonacci. I wasn't great at market structure. And market structure is insanely important when you're wanting to use Fibonacci. So when I back tested it, the results looked crappy, so I did not trust it. So now that I'm a better trader, I was able to back test it recently, my ability to use it. And the win rate is it's not as great as my normal strategy, but the risk to reward ratio is amazing. So you have a lower win rate, but you're trading that off for 1 to 4 or more on average for your R&R and your setup. And that allows you to have a 25% win rate and still break even, right? So That's kind of the trade-off when you're using Fibonacci. So you need to make sure you're layering more rules onto fibs. That you're not just looking at a golden pocket and expecting a rejection or a bounce. That you are looking at like a golden pocket level and you're adding layers. Like, I will not enter, you can say to yourself, I will not enter a long unless we are at like my golden pocket or 786 level. Let's say price action is going down, and confluence with an order block and confluence with a change of character. And that change of character can happen on a lower time frame, as low as like the 1 minute or even the 15 second, depending on your rules. And then you'd be targeting the higher time frame local highs as part of your take profit. And that could be a good strategy for you. And like stuff like that, if you're adding more layers to it, you'll have a higher win rate. But sometimes you'll notice that they'll just break right through those zones that you build for yourself. And that just tells you that you just don't enter the trade, right? So definitely, if you're going to be using fibs, you need to understand market structure, what a strong low is, what a change of character is, you know, what a break of structure is, where the high is, where the local low is, so you can actually use Fibonacci properly. Because otherwise, you could just be drawing levels that don't actually have any backing behind it at all. Just be aware of that. So yeah, fibs are great. Just make sure that you are that you have your foundation done for it. Like you have an understanding of market structure and you add layers. Fibs are like a self-fulfilling prophecy. The more people that use it, the more you'll find that it can become more and more accurate. It's more of a retail tool. You're getting an understanding of where exhaustion is going to occur. Let's look at the daily, for example. And then I definitely got a head out, guys. If you can use it in a macro sense, you can use it in a lower time frame too. Like Fibonacci works on every time frame. Let's say you're trying to find out the golden pocket for like this swing from this high to this low. You just pull a fib from that local high. I recommend turning on the magnet tool so it clings on to the wick. And you'll notice that we got our rejection in the macro. Most people will be targeting the golden pocket if you've entered in a long, like down here, for example, or you're preparing for shorts here. So we hit the golden pocket and we had a massive rejection. It's just understanding where your highs and your lows are, macro or micro. And you can use them in different ways. You can use them you can build clusters from different time frames. You can see a 4-hour golden pocket layering over top of a 15-minute order golden pocket. And they can use that for additional confluence. Fibs work incredibly well when used properly. Yeah, I'm going to have a fib video coming out very soon. So you guys can use that. I'll be teaching about Fibonacci and Fibonacci clusters and what kind of rules you can stack over top of it to give yourself a profitable trading strategy. But I will tell you, though, that setting alerts for it can be a little bit more time-consuming, depending on the time frame that you choose for yourself. And if you're going to be using Fibonacci, make sure you back test each individual asset that you plan on using it with, right? Like Bitcoin, I know does really well with Fibonacci, but the asset that you choose might not. Like if you're choosing something like file token or something like that, just make sure you go back in time, put yourself in replay mode and test it out and see how well it works. Trade the coins that fall or inversely fall for Bitcoin. Respect Fibonacci. They are your money. Yeah, nice, man. Well, I said I was going to go a half an hour ago. Yeah, I read something in there. Sorry. I got to go, guys. You have yourself an amazing day. Again, for this setup that we're looking at here, in case anyone's wanting to take it, make sure you have your budget set up properly. You know, if you're trading with $1,000 account, risk to lose $10 to try to gain $20 or more. This is the current local high that you can use as your stop loss. This will be considered a good location for a stop loss. Once we get that lower low taken, we need a full body closure below 82,395. And then we can use this as a stop loss guard and potentially jump in. If it closes way down here, do not take the trade because the R&R will not be there anymore. Okay, so make sure it doesn't destroy the risk reward ratio because this is relatively tight in terms of R&R. Personally, if you're looking for better shorts, if you want higher win rate probability shorts, you wouldn't do it inside of a value area to begin with. You typically want to do it at a value area high to increase your chances of having a profitable setup. This is very internal. If you want to be more patient and wait for longs, if you're like a one-dimensional trader that likes to only do longs, then this is our value area low. We could be grabbing the liquidity down here and just look for that internal change of character occurrence. And then you could potentially jump in for a long there. Hopefully if that happens, if we get that kind of setup down here, that it happens in the morning tomorrow when we're ready to jump in on our trade hunting call in the morning. Thank you for everything. Reached out in Discord. Oh, right. You're the winner. Congratulations, Noah. Sweet. Yeah, yeah, like you said, since you reached out to me, just be aware that you might get added by other Kyles. Just keep an eye on that handle that is spelt properly. I put the spelling in the Discord down below. So, yeah, be safe. I'm not going to be asking you for money. I'll be giving you money. So, all right, cool, guys. Have yourself an amazing day. Thanks for jumping on. And I'll see you guys in the next live. And I'll be hopefully very soon be doing more lives for you guys rather than just Mondays. I'm freeing up my schedule for it.